Good morning. Good morning.
Morning, everybody. What's going on?
Morning, Ron. TJ. I don't think I know TJ, but what's up, TJ?
Oh, that's my man. From VTech. What's up, Contrell? Appreciate the support, bro.
What's up, bro? All right, so we're gonna jump right into it. So we get the information out the way and get into our discussion.
Cool.
So another team meeting. Here we go. All right, so welcome to another team meeting where our number one mission is to distract you from your current story, dismantle your current belief systems, and inspire you to change your mind, which will then inspire you to change your life. All right, so a couple of quick reminders. Number one, please continue to follow us, like, comment, but most importantly, share, because our number one priority is to serve. All right. So the more people at dinner, the more people we can serve. So we appreciate the likes, we appreciate the comments, but most importantly, please share. Game 7 Academy program, where we do our tutoring and mentoring. Go to game7.com, learn more about us. Game 7 Shop, game7shop.com is our apparel website. T-shirts, hoodies, windbreakers, sweaters, jackets, masks, and some more stuff all on the website. I don't know where the Goal Line program went at, but we got Goal Line every Saturday morning. We do some free workouts at 8 a.m. And we can also work with some teams and other student athletes. And student athletes are not people in school who happen to play sports. You should always be a student athlete. Always take care of your body. Always take care of your mind. Get more intelligent every day. And you can do that through our Goal Line program. Go to game7.com. Check it out. So a quick review from last week. Last week we talked about neuroplasticity, which in essence is the highways of your brain, right? Your connections, every movement, every thought, every feeling, everything that you do is a connection between some circuitry of neurons, right? Novelty, variety, right? Curiosity, everybody knows what that is. That promotes it. Pleasure and pain promote it. Purpose, focus, exercise, and discomfort, all of it together. You cannot just choose what you wish to choose. You cannot do novelty to explore things and pleasure but lack everything else, right? Like right now in society, especially in America, people are at a breaking point. So a lot of people are taking getaways. A getaway is very different than a vacation. A vacation is earned. You work your whole year, you get your bonus, right? Or you get your tax write-off back, then you take a vacation, you earned it. Or as opposed to your responsibilities are overwhelming you and you just need to escape in your responsibilities but you're not putting the work in, right? You only take a break from your responsibilities when you've been taken care of, right? So you can't just choose novelty and pleasure. That's what that would be. You have to put all of it together. All right. So what's the focus for today? So for today, you're going to learn today. So last week turned out to be a pretty powerful podcast for us because this week, holistically for all of us, probably in my opinion, was the most powerful week for us, speaking in terms of our financial knowledge and experience. We definitely had a week that's going to be a story for us for the rest of our lives. And we're going to reiterate the learning process and tell you some things that we learned that we wish for you to learn ASAP. Because March is tomorrow, and some big things may happen in March that we absolutely missed last March, and we will not miss again. Right? We've done a lot of work for you, but we have one thing you need to learn so that we can help you once things go crazy. because all the money is made in the chaos. So when you watch this podcast or you watch a show, you watch a documentary, you listen, no, you don't listen, or you hear your teacher talk, right? When you're just listening to someone provide you information, all you're doing is collecting information. You're not learning. There's a difference between collecting information and learning. For example, this is the podcast era. You can listen to every podcast in the world, but you don't learn until you go through this process. So step one, consciously entertain the idea. Whatever you are looking at, pay attention to it on purpose. If you're looking for physical health gains, look everywhere for it. Every time you ride past McDonald's, you should think about it. Every time you ride past the gym, you should think about it. Every time you see an advertisement, get people, you should think about it, right? So consciously entertain the idea. Secondly, you must be emotionally involved with the idea. People do not act at the highest level. People do not commit unless they have emotions involved, especially adults. It has to be something you care about. It cannot be something that you want. It must be something that you need. Constantly entertain the idea, get emotionally involved with the idea, and most importantly, go act on the idea. And you can change the end result, but you must act. You must act. All the podcasts, all the movies, all the books, all the conversations. You must take the information and put it in action, right? Books are overrated if you just read the book. Books are everything if you take the information and put it in action and use it, right? Go act and you change the end result. But number four, the learning is the feedback that you get from the new results. And you must be strong enough and smart enough to know the difference between feedback and criticism. There's a huge difference. You read all these books, you listen to all these podcasts, you watch all these shows, you go do it. You didn't learn until your feedback tells you that you learned. Right? You got it wrong. Right? You may have learned another way that it didn't work, and that's cool. That serves a purpose. But the thing that matters most is when you learn a way that does work. And your results tell you if you're learning or not. And we talked a couple of weeks ago, in our culture, in our society, we don't tell the truth. We often avoid the results. We can't have the tough conversations because people don't really want to learn because they're not emotionally involved. They're emotionally involved with themselves and not the idea. So pay attention on purpose, number one. Constantly entertain the idea. Number two, get emotionally involved with the idea. You must care. It must not be a want. It must be a need, right? Are you interested or are you committed? Big difference. Number three, go act on the idea and change the end result. And keep acting and keep acting and keep acting and keep acting until the result is different. And then finally, the learning is the feedback that you get from the new results. The learning is the feedback that you get from the new results. And understand the difference between feedback and criticism. Understand the difference between feedback and criticism. All right, moving on. So, some information that I learned throughout the week, coupled with our experience, something that we really need to learn. You must not hear this. You must not listen to this. You must take this information and go learn about it and utilize it in a way to better your life. And this is not just for millennials, but this is what the data said. So to retire at 65, which is weak overall, like that's crazy. I had a meeting last year with our retirement group agency or whatever you want to call it. I literally do not get my retirement unless I teach for 30 something years or maybe 30 years, whatever it is. I can save, but if I quit after 27, I don't get it. You a nut if that's your plan. You a nut. Right? That was made from before where we still had pensions and Social Security actually worked and you just wanted to not live your life until you were 65 and your body halfway done, even if you in peak shape, right? So to retire at 65 with that weak goal, millennials need to save half of their check. And this is not opinion. This is based off of research that was reiterated to society through CNBC. So millennials should aim to set aside nearly 50%, nearly half of their income for the future. If you want to live off of even half of your final salary in retirement, you need to save 40% of your income over the next 30 years. All right. So if you want to retire at 65, you need to save 40% of your income for the next 30 years. That is according to Olivia Mitchell, who's a professor at Wharton at UPenn, which is one of the best business schools in the world. All right. 40% over 30 years to retire at 65. This calculation is based off of research from MIT, one of the best schools in the world, and takes into account a few assumptions. The first one is that you want to retire at 65. I don't know about you. That's not much of a stretch because most people live their life with that plan. About a third of millennials say they expect to retire between 65 and 69, right? So another 34, 40 years before you get your reparations, right? 43% of millennials say they actually expect to retire earlier, so 64 and under. All right, but only about half of millennials are planning to contribute less than 6% of their income to a 401k this year. You do your research, that is also not the way. I'm not a financial advisor, these are just my opinions. Do your thing. When you do your research, that's not the way. Only about 1 in 5 are currently saving more than 15% of their income. The second major assumption is that investment returns over the next few decades aren't going to match the roughly 10% historical returns that Americans have enjoyed in the past. Right? You learn the game, you make way more than 10% in the beginning. And we'll talk about later how 10% actually becomes big once you have a big initial investment. But in the beginning, you can absolutely kill that 10% rate if you know what you're doing. 40% of retirement savings rate calculation does not take into account the fact that Social Security is done. If Congress does nothing, the agency's funds will only be able to pay about 80% by 2035. So if you're around our age, that's 14 years from now, you'll still be another 20 years away from the 65-year mark. So that's going to be 20 years without Social Security, according to whatever projections. So you're screwed, right? Experts are saying that reform happens, but if you learn the game, the government does what the corporations tell them to do. Those are how politicians make money. Like the data for Black Lives Matter over the last year came out this week. Y'all know where most of the money went to? Y'all know?
No? Corporations?
Came from corporations, but most of the money went to organizations, LGBTQ. I don't got no problem with it. We all do what we do. Black Lives Matter. And it was only 90 million on the books. Where the rest of it go? Right? But it's all a big game, and all you gotta do is learn the rules. But nobody's coming to save you. And lastly, in general, millennials and Americans overall will need to work longer and claim Social Security later. Benefits from Social Security are 76% higher if you claim at 70 versus 62. I know you 62, bro. Your great grandson is only 10. You got eight more years left until he's 18. You got till 70, right? And that'll give you a whole bunch of extra life savings. I should have looked up the average life expectancy and compared it to there. I don't know. But if you can keep working, do so. If you can't work full time, work part time. Every little bit helps. So just from that, you can tell who funded this article, right? You 62, you got 8 years left. You'll make it back on the back end at 70, right? So work. Social Security is about to fall through. Keep on working. Save half of your money. Save half of it, put it in the 401k so I can invest it and give you a marginal return, right? You've made it. You got your 401k. You're 30, 35, 27, 35, whatever the age range is. You got a great job. Save your bread. I'm 31. This says go to 80. I got 49 years left. You know? Go ahead, Jess.
Life expectancy is 75.
75. So on
For,
average, thank
for
Jess.
men. From men, it's 75. And for women, it is 80 years old.
All
Which
right. So men, you got 5 years, and you said 80. And women, you got 10 years to enjoy it after your first 70. What you gonna do, bro? You gonna eat some grapes and strawberries at your big house? All right. So, controversial statement: people in poverty save. Wealthy people invest. People in poverty save, usually the bank, 0.06% return. 0.06% return. Wealthy people invest. On average, 10% return. It's like 1,000 times difference. All right, so here's what you can do. Start with earned income. We preach entrepreneurship. Yes, we do. But we all have jobs. Had jobs for a while. Done very good at our jobs, got promoted, all them kind of things. KG had a late start, but he was a professional athlete. They all got late starts because they get a head start, kind of. Right? But earned income. That's number one. Earned income. Get a bunch of it. Number two, invest in assets that grow. Invest in assets that grow. Right? Contrary to belief, one of those things may or may not be a home. We had a conversation yesterday. Two of us are homeowners. Two of y'all want to sell your homes, but then at the same time, you really don't because it's a seller's market. But once you sell, you become a buyer. So you kind of get flipped over, right? And as soon as they mess with the interest rates, which we know is coming, the interest rate goes up, your home value goes down. It never changes for them. Oh, interest rates are low. Well, the base price went from 300 for this crib to 375. They just switched the game around. Oh, interest rates are high. All right, I'm gonna bring this down. We're gonna get the same amount of bread, right? So figure out what kind of assets you can invest in that grow. A great one is the stock market. If you had your earned income and save and you're ready to grow, right? And there's other mediums too. You can sell t-shirts or whatever the case may be. Invest in some assets that grow. Number three, create a huge amount of capital from your assets that grow. Create a huge amount of capital from your assets that grow. That's something that 50 is great at. He got his money from the beginning, kept flipping it, kept flipping it, kept flipping it, kept flipping it, kept flipping it. Then he signed his name on that vitamin water deal. Whole life changed. He everywhere. Right? Get the bread, flip it. So get a huge amount of capital. A huge amount of capital from your assets, from your real estate, from your stock market, from your t-shirts. And then invest in assets that generate passive income. Passive income means you don't need to be there. Earned income means you're working for it. I'm a teacher, earned income. Passive income is it's a charter school. Hypothetically, I own the school. We make the money through tuition. I never step in there. I get the bread. Passive. The tax breaks are crazy for passive income. Once your bag is big enough, even modest returns will result in massive passive income, and that's when you really turn up, right? I made this yesterday. I just found out this morning that Jay-Z did a deal with Louis Vuitton, a liquor deal for $500 million yesterday or Friday or something, right? So you got that massive income, then you can talk that 10%, right? And you got to start somewhere. You invest in $100, $1,000, a couple G's, you can make way more than 10% safely. But you continue to add that up. They say the first 100 G's is the hardest to make, right? But after that, because the returns need to be so small, it takes a little bit longer to grow bigger, but the returns need to be smaller because there's so much money in your moves already. All right, so here goes some helpful trading tips that we paid thousands of dollars for, thousands and thousands and thousands, bumps our head over courses and everything else that we're sharing with you for free. So number one, when you trade, day trade, swing trade, Investing is a little bit different if you're gonna set it and forget it, but you still want the ideal entry. But if you're day trading or swing trading, volume, it has to be people at the party. We've all seen the videos of the stock market in New York. People running crazy. Volume. There's got to be people there. Number one, volume, volume, volume. Number two, scale in with intentional entry. All right, we'll do some examples to talk about what that means. So scaling in is investing a lot of money, whatever your safe amount for a lot is, over multiple times. So say you want to invest 500 into a trade and you see it approaching the bottom. When you think it's at the bottom, put in 100. Let it confirm. It goes down just a little bit more and it matches up with your numbers and your charts, put in another 100. It stays there, you be careful. It's a little iffy, be ready to exit. Starts to turn up, another 100. Starts to take off, boom, put the rest in there. Right? You were very intentional with your entry as opposed to getting in where you thought was the bottom in this case, and then it goes down some more. You get stopped out because you lost too much, and then as soon as you're out, it turns. Right? So scale in with intentional entry. It's like a sniper. They watching they target. They watching they target. They watching they target. The shot may be clear, but it's too much wind. Not yet. Dang, I got him, but it's an innocent citizen next to him. Not yet. Boom, got him. Right? So scale in with an intentional entry, like a sniper. Number three, average is the best. Kevin Samuels. All right. So EMAs, exponential moving average, if you are day trading. MAs, if you are swing trading. Essentially, they give you the average cost of the stock over those time periods, right? Either 9 minutes, 21 minutes, 50 minutes, 100 minutes, or 9 days, 21 days, 50 days, 100 days, 200 days, whatever your time period that you're looking at your charts, that's what it tells you. It gives you the averages so you have something to base things off of. Number four, VWAP, all right? VWAP, volume weighted average price. Essentially, that's like the EMA for the day. It's following the volume and the averages throughout the day to give you an up-to-date picture of what's going on. More or less, it's kind of like the bottom line. Like if you ever watch ESPN or the news, like CNBC, there's something always on the line to keep you up to date what's going on. All right, breaking news. We'll talk about that too. Volume, scale in, intentional entry, EMAs, VWAP. And lastly, turn and run with it if it runs away. Turn and run with it if it runs away. So say you get in and the stock starts going the opposite way. You don't have to hold it. You don't have to hold it. Now, if you just setting it and forget it, you're in a 30-year investment, cool, let it rock out until it hits whatever number. But if you're trading, actively earning income at a fast rate, if it goes the other way, cut the deal and get in and run with it down or run with it up. And then when it turns, come back and run again. All right? So be prepared to scale in and also have some funds available to turn and run. Because say you lose 200 and it's got another $8 to go, you can make that 200 back on the way down plus more. So volume, scaling with intentional entry, moving averages, VWAP, turn and run. Helpful trading tips. All right, so the most important thing we need you to do, press the goddamn button. Y'all remember that from the movie? Press the goddamn button, right? So what does that mean? That means you must know how to execute on a signal. You can have insider information from Warren Buffett, right? Or you can get a message from us. We can tell you exactly what's going on, but you must be able to enter yourself. It is illegal to trade for somebody else, but it is not illegal to share signals. Like, yo, y'all, I see this stock. I think it's about to do this, XYZ. Or you can pay for programs like where I got that signal from Benzinga. That tells you that somebody with a whole lot of money made that play, right? And it's best to follow the smart money. Like banks are not making plays to lose. Sometimes they do, but you can follow the smart money. So we're doing all of this work for the people we know, the people in our circle, the people that we will meet. But when the time comes, you must know how to execute. That goes back to the learning. You can watch the podcast every week. You can listen to a multi-billionaire, Grant Cardone, and whoever else got all the money in the world. You can listen to them every week, right? And they can tell you exactly what to do. But if you don't know how to do it, you're screwed. You're absolutely screwed. And there's no reason to not know. Get on the app, paper trade the fake money so you can be prepared. I had a little moment today. I was like, dang, last March, if we knew what we knew today, ain't no more DCPS. Gone. Absolutely gone. In a couple weeks, probably, yo. Maybe a couple months. If we could just roll that March, like probably with one trade, you feel me? You could just kept averaging and averaging. You could have put all your bread more or less in one trade. Wouldn't have been the smartest, but after you notice the trend, like every single chart we looked at plummeted. Now they're talking about a crash. Was last year considered a crash? Was it? I would assume. Not really, like not defensive, I guess. Go ahead.
Yeah.
You can go ahead.
No, go ahead, Pizzle. I was just letting Malcolm know that you was your internet kind of choppy a little bit.
Nah, yeah, you good. I would definitely say it's a crash. I mean, it was a crash. It's, you know, you look at the data, it was a crash.
Crash is a 40% loss, right?
Yeah, most stocks did lose around or at least 40%.
Okay. So we had the crash. All right. And then talking about another one. So if you missed it last year and you miss it again this year, it's your fault. Just always says about 2008, I'm gonna be prepared for the next one. Right? We kind of missed 2020 because this was the first one. It wasn't the next one. You know? We prepared for this one. So you must learn how to read a signal. So let's talk about what this means, and then we'll go through it. So this signal means that there's a March 3rd, $390 call. So that means that on I forgot the ticker. There's a stock. There should be a stock there. I forgot the ticker. So say Nike, NKE. So on March 3rd, you think that Nike is going to trend to 390. And this person bought a sweep. They bought a whole bunch of these contracts, right? Near the bid. So that's like near the buying price, what the buyers are asking for, right? Not near what the sellers are asking for, what the buyers are asking for. So on the low end, he got it for the low, got 447 at $82.10 per contract, right? Per 100, right? That's that 0.821. And the open interest means that there's 6,349 people or entities that are in that same deal. And at the time that this person or bank or whoever made this play, the price was at 380 and 1 cent. So they see a 999 potential gain over this week. I'm assuming the 3rd is Friday. The 3rd has to be Friday. The 3rd, the 3rd is Wednesday.
It's Wednesday. The 5th is Friday.
Well, they usually expire on Friday, so I thought Friday. But all right, but by the 3rd, so in the next couple of days, they're seeing a $10 move. All right, and you must be able to go act on that. Anything y'all want to share before we pull up the trades?
I think it'll make more sense once you definitely show the trade. But just to give context to those individuals that may not know too much about options trading, so that's one thing to highlight too. This is a option signal that you would see in a chat or from any other maybe Discord that you're in. But essentially, this is the information. That's essentially my bad. I'm trying to read through the thing, but they're trying to. All right. So essentially, this is how you would go down the list and find the option that this person bought. You would first go into the options category. You would look first by the date, right? By the expiration date. You would make sure that you're looking at calls, which are expecting the price to go up, and not a put, which expects the price to go down. Okay. And then it's very, very important to know the difference between buying something at the bid and the ask, which Malcolm did highlight. But just to kind of slowly go over it, bid is exactly what everybody else who wants that option is willing to pay, versus them having an urgency to buy it at the ask price, which is what the sellers are wanting to sell it for. Okay. So for example, I am a seller of this hoodie. It is a Game 7 hoodie. I want $10 for this. Let's not say $10. Let's say $50. Okay. But the individuals who are interested in buying only want to buy it for $40. Okay. You would know that maybe these hoodies will be worth more and worth more fast if people change their position from being willing to pay 40 to, oh yeah, no, I'll definitely pay the 50 right now. That will give you a very big indication that there's maybe a move that is going to happen sooner than expected. Okay. And they don't want to miss out on that deal. So it's important to know that that is a very big distinction when you see someone buying a large amount of options at the bid versus at the ask. So this can lower your anxiety as far as you missing out. Okay. Now you still have to read the charts and you have to be able to make your own educated decision on whether this is a good deal for you or not. But that does speak volumes about where this individual sees the stock going, because he's a little bit more reserved than he is anxious. Okay. And then also just to highlight that all contracts come in a bundle of 100 shares. So that is the reason why Malcolm is saying that at 0.821 cents, he's actually paying $82, because you have to multiply that price times 100. And the easiest way to do that is just to move the decimal point 2 times to the right. Okay. We learned that early in school, but sometimes we've been out of school for so long that we don't remember those tricks. And sometimes that is very, very important. And many times that's important to remember when you have to make a decision pretty quickly. So rather than bringing out your calculator, just know that that's an easy way to calculate what the cost would be to you. Okay. That's the part I wanted to highlight and kind of share, because some people might be jumping on this call either now or in the future, and they may not have the historical experience that we do. And this may be like Chinese to them, because I do know for all of us, this was like a foreign language to us when we first started trading.
Yeah, undoubtedly. If y'all want to learn more, Game 7 Academy. We'll take all the time in the world. All right? Bizzle, KG?
I mean, I don't really have too much to say on this. I mean, you gotta know stocks, right? It's a great. You gotta know what the signals are. If you see a signal like this, is a great opportunity to increase your money and great opportunity to invest and get your bread right. So you gotta be able to be equipped to play the game. And that's what this is to me.
Last thing I wanted to highlight: just because an individual is putting large amounts of money into this kind of call option, it does not mean that they necessarily are going to hold it all the way through the expiration date or until it reaches $390. Their intention for the trade might be very small. Okay, they may be looking for it to go from $380.01, where it is currently now, to maybe $382, which is why they purchase so many contracts, so that they can multiply their money in a small window, right? So don't think that this individual is just tied to this contract until it reaches that strike price of $390, because it is important to know that you make money on the way up.
And one thing I'll also add too, one of the guys who we learned from, with the stocks. He made a good point this past weekend this past week where he said that options have an expiration date for a reason. So like Jess said, when you see that March 3rd on there, you know that you have until that time to do whatever you got to do. It might pop this afternoon. You might just have to get out this afternoon and forget the next 2 weeks. Or if you see the opportunity, take the opportunity. So that's just to kind of piggyback on that.
Good, KG? Okay. All right, so let's pull it up. I ain't get a chance to run through these comments. Let's acknowledge the compliment. Oh, that was you, Jess. I was like, who is JS? Okay. What up, Kels? Good morning.
What up, Kels?
Good morning, Kels. Silk the Shocker. Morning, fellas. Keep speaking facts and lead the way from being consumers. Compound interest. Yes, sir. Silk, we need to see you on one of them Saturday morning calls, bro. You feel me? I remember you was catching them oops. Can you still catch an oops, Silk?
Man can't jump over a pencil now.
UVXY. That's what we traded on Friday, right?
Yeah, it definitely is, Contrell. That's wild.
That's about to be our first review, TJ. Every expert's thoughts are as a beginner. Very, very true. Very, very true. You can't lose money if you take profits. Very, very true. TJ, you might need to be on here with us, bro. Sound like you know what you're talking about a little bit. And Mitch Johnson, good morning. Good to see you. Good to see you. Good to see you. Working out the body and the mind. Good job. Good job.
Also, just a quick throw in. With options, remember you can make money going up or down, right? It's two ways with options that you can make money. You have calls and you have puts. Calls are when you're expecting whatever option that you have a contract for to increase. A put is when you expect whatever option you have is to decrease. So you don't always have to make money just off of a stock raising. If you do your research and you're charting graphs and you anticipate a stock or some news that just came out about a particular stock, you can make money when that stock is actually losing. So I just wanted to put that in the air there. So don't think you can't possibly make money on the way down. You actually can. So it's two different ways that you can earn profits. You can earn profits while a stock is doing well and while it's not doing well.
Yeah, undoubtedly. And if you've been listening to us for some time, you should know that by now. Otherwise, hang up and get to work. All right, so here we go. First one, UVXY was a trade that we made on Friday. So UVXY. So we're going to walk through the whole process. So first thing that you do, you want to make sure you're on the daily chart. You are reviewing the overall trend of the stock. All right. So clearly, ever since the Rona for real, March 17th, this is plummeted from 135 to about $12 or so today. So ideally, you want to play this down. Like KG said, a put. You make money in the losses too. A put it down. Call him up, call her up, put it down, right? So put is down. All right, so we check the daily chart. We don't even got to chart this because we're not there right now. So you zoom in to the current ranges. Zoom in to the current ranges. So we got a range from about November to today. Still trending down, trending down, trending down. All right. So from research and our work in the morning, we learned that a potential play on this would be a $10 put. So we checked out the day chart, right? Our lowest point is here. Boom, put a line right there. And in the current range, our highest point is here. Put a line right there. You can make your own color codes to know about supports, what's holding the stock up, and resistances, what is keeping the stock down. So like, what is the floor and the ceiling of the current range of the stock? So then you move into the 4 hour. I mean, each candle is a 4 hour candle. And we're not going to turn this into a teaching thing, fellas. We reviewing. You want to learn? Hit us up, Game 7 Academy. All right. So each of these candles is 4 hours, right? So we zoomed in to closer to today, checking out the 4 hour chart and seeing if anything stands out. All right. And you could, if you wanted to, put another line here because clearly this holds the stock up a little bit right here if we're looking at this area. We're trying to find all the key areas of support and resistance. Then you zoom into an hour. You see, like, you don't really got to do no more lines there because everything is kind of held up. We got here is another level. Notice as you zoom in more, you start to see what's really going on. All right, boom, we got another level. And notice like a lot of these are like psychological numbers. 830, more or less. 875, 925, 950, 975, $10, 1025. Just above, I should probably bring this down. 1050. All psychological numbers. Numbers that make people think. I'm gonna buy at 10, I'm gonna sell at 1050, get a $0.50 increase. Then after that, you zoom into today. So we're going to say today was Friday, which was the 26th. All right, so the 15-minute, you can check in the morning. So in the morning, and I don't want to mess up my charts, but this darker gray kind of navy blue area is pre-market and aftermarket trading. So it's like after the club closed, if you VIP, you can stay, right? Or before it's open, before the concert starts, if you VIP, you get to get in early and see them rehearsing, right? Aftermarket and pre-market, like before the actual thing happens. So there's people that trade. It's a lot less volume. I'm not sure the volatility. I don't even really trade it, but I would assume it's lower. But I see it sometimes going up and down all crazy. So definitely do your research if you want to trade pre-market and aftermarket. I'm not going to speak on it because I don't do that. But here at open, you can see from our lines that was already set. Boom, stop. Where's my note? I moved my note. Here we go. So you have your note that you can put directly on the chart. And this is the 15. We're still on the 15-minute chart. All right, so you got your lines. Actually, let's go to the 5. Come on. All right. So at open, which is 9:30 a.m. Eastern time, 6:30 Western or Pacific, and whatever other times in the middle, but 9:30 Eastern. So we know we're looking for a $10 put. All right, so you probably should put this right here at $10. All right, let's talk about why $10. Let's make this blue line. Let's make it thick, and let's make it solid. So this blue line, let's zoom back out. So we're all the way over here today, but you can see previously it gave the stock trouble here. Right? This is the out. No, we can go. This is the hourly chart. On the 17th, it gave the stock trouble. On the 23rd, it gave the stock a lot of trouble. This kind of carried the stock from February 4th. No, it did. February 4th through February 12th. Go back some more. This whole time period here. So from January 8th to January 25th, it carried the stock. So that $10 level is something that holds very strong. And think of it like a pipe in your house, right? There's a lot of water pressure going through those pipes, more or less at all times of day. Your water is readily available unless you're very frugal or cheap or whatever your situation is, and you cut your water pump on and off whenever you need it, or you got an auto adjuster. But 9 times out of 10, the water is pumping. right? But if there's ever a crack, boom, it's going to blow up. It's going to be water everywhere, right? Not trying to be mean, but I seen that happen in Texas a lot when they had to deal with the ice storm, right? The pipes bursted, right? So this is like the pipe. If it gets through there, something is going to happen. So let's go back to Friday morning on the 5-minute chart. So we know we're looking for a break from $10. All right, so boom, came out over $10. In the morning, there's tons of momentum. Everybody is there, right? It's like if you teach in the high school. In the morning, all the kids are there. By the time it's 3 o'clock, they're gone. Where did they go? You know? Boom. So it hit a 1070 mark, right? And if you notice this blue line, it matches. We got a line there for some reason. Boom. This is where it got stuck, the previous close. The stock more or less repeats itself. It's in a big range, right? Call it what you want to call it, but I say the stock market is a woman. It's very emotional, very volatile. Men must learn to figure them out, and they must learn to be figured out, and we got to do our part to feed the women whatever they see as the way that men operate, right? Just like Mother Nature, you never know. Father Time, very consistent. It's different, right? So it hit this mark previously. If you wanted to be a little risky, right, or if this was your plan, throw some bread at it there. Like it didn't get over before, but it may get through. And notice that your supports and resistances is a range. Like we have it at 1060. It may go over a little bit. That's something we all had to learn. Like before we be like, all right, get out. It went over. It may just peek in, come back out. Let it prove that it's going through. It did not. And then these are 5 minutes. So in 10 minutes, boom, it dropped. All right. So it's going towards our $10 mark. And if your mark is $10, do not get in before. If your mark is $10 with a potential to get in at 1060, cool. Do your thing. So let's put on the indicators that we talked about. First one is volume. Are people at the party? This volume is saying every 5 minutes, green is that amount of buyers, red is that amount of sellers. So it started off kind of hot, right? Not that much volume in the beginning, but notice as the volume picked up, look at this candle. It got bigger. Volume picked up, candle didn't get bigger, but it moved up and more or less it stopped right at the $10 mark. Like, all right, we broke through the $10 mark. We got some RS volume. That's like twice the average. This blue line is the average, if you can see at the bottom. Boom, they broke through. All right, but it's sitting. You can tell it's like getting sucked into that $10 line. It went up to 1035, but it didn't close until 1015. All right, but notice the volume rose. More people are buying. All right, so you could have even entered for a call here. You got rising volume. It's sitting on your support, and you know it can go to 1050, 1059. You know for sure, nothing is for sure, but you know for sure, according to your research, it can go to 1059. Boom. So you can get in. It got rising volume. But notice we got another level here from previous research. Notice how it got stuck. Volume went down. Like, uh-oh, might want to get out. Right? Might want to get out. Might want to get out. Right? Or maybe you enter for a put lightly. Because you notice that the volume is still pretty high, but it's sold off. There's a lot of sellers. Next candle was more or less the same as the previous candle. So you're getting like a little mini channel. Be careful because the stock didn't pick the direction yet. Right? Your girl mad at you. You don't really know what's wrong. You just know something is wrong. Right? So you're trying to figure it out. Or she's trying to figure out how to talk to you so y'all not arguing. Or on the other side, you doing what you do so y'all don't argue. But y'all don't know what's going on yet. Right? Being that little mysterious phase. Then boom, took off again. Volume rose just a little bit. Not high like in the morning. Then it hit our mark. But the volume rose. Like, uh-oh, it might break. But this candle, this wick, this bottom part, tells you that it's still flirting with that 1030 level, so be light. But boom, then you get a red candle right at resistance. Might be a good time to enter, right? Lightly, if 1060 is your mark and not $10. But then you get this big, huge candles. Only big candles break a trend. Notice that this went all the way up until we got the big candle, a big range. That's the only thing that's going to break a trend, right? This was a bank. A bank had this in there, or a hedge fund, whatever kind of financial group. I guarantee you, maybe one day we'll get the public data. It hit this 1060 mark from the previous day's high, and they sold off, right? Big volume are banks. Big candles 9 times out of 10 are banks. Boom, the bank sold, and look where it went right back, right down to $10. Boom, get in, right? Lights, right? You got the big candle and the rising volume in your direction at your level that you found pre-market. All right, that might be a good time to enter. Then you got this little candle, a spinning top. Got to do your research. But this candle is called a spinning top. All right, and it's resting literally at our level in the volume rolls. Throw a little bit more in. That's the scaling in. You're getting in carefully. You snipe this. You've been doing research since the morning. Got research from yesterday. Got research from previous years. You've been watching it. Boom, it broke your level. All right, get in. Right, it's safe to get in because the candle is so big. But still be careful. The volume is on average not that high, but look at the trend. You got the trend, rising volume over the previous 15 minutes, and it broke your level, right? You can get in and ride it out. You know from this morning that this 979 level is something that potentially may hold it. So don't trip out if you get stuck. Look at this candle. It's a weak candle, but all the weight is in the bottom of the house, in the basement. The floor is about to fall out. A sinkhole is on the way, right? According to this 5-minute range of time. Uh-oh, green candle. Should I sell? Should I sell? Should I sell? No. Nobody's at the party. Nobody worried about them, right? If you panic because of green candle, you missed on this big red one. Big red, not a bank, but a lot of regular people, right? But then now you hit another support almost, right? Remember, support and resistance is a range. You get another support in a range, rising volume. Get out. Now, what I do at my point in trading, I'm taking all my bread. This was a 70% return. And I scaled in here. Oh, this was a story. I got in here. Light, I got in some more here. Literally, as this 5-minute candle closed, I get a knock at the door. It's like, it's a muffled knock. I open the door. It's my son. He got blood everywhere. He's having a nosebleed. So I'm like, damn, right? So put my phone down. I run to get him some wipes and a rag, lay him on his back. I'm like, yo, hold it. I'll be back. I come back. I'm getting smoked because I didn't get to keep averaging in, or I didn't get to cut it if it ran too early. Because hindsight being 2020, I would have cut it because I was in for real, but not heavy. Like I had way more funds to be able to finesse my way in, right? And then I really could have jumped in there, or I could have just cut it, knowing that this level was here and got in up there. Hindsight is 20, but I was down, right? And it was in my head. I just started doing push-ups. And my girl like, yo, just stay calm, stay calm. Usually me calming her down. We talk about the market as a woman, right? I'm doing push. She's like, yo, just chill out, just chill out. I was like, no, you don't understand, yo. Like, I've been working so hard to get this strategy, and it got snatched out of my hands. But at the same time, I couldn't be mad. I can't leave Nas there all bloody because I'm trying to get some bread. You feel me? But I came back. I was patient. I was down. Didn't even get in no more. Numbers was, it is what it is. If it got through here, I just would have had to take the L. I also did not sell at 59. I gave it some room. Watched the volume, and it came back. So even with that loss and not getting to scale in because I was intentional, I got a 70% return in 10, 20, 30, 35 minutes. 70% return, right? Keep in mind the bank is 0.06. The average stock market return is 10%. But keep in mind that 90% of people lose in the market. So you got 100 people, 90 people lose, and the average is still positive. That means those 10 people was absolutely cooking. They not making no 10. They making 30, 40, 50, 60, 70, 20, multiple hundreds. It's this, here goes a gem for y'all. The YouTube channel Trading Rush. It's like a little bot. It's a great channel. He talks about he doesn't win all the time. He shows his losses, but his average returns is 200%. He don't even take the bread until you get 100% return, and he's showing the data, and he's too smart for it to be made up, right? So just in that time, because I did the research, 70% return. But Pizzle his risk tolerance is a little bit different. Him and G, they like to leave a runner. So say you had 40 contracts. They might take out 35 and leave 5 running. So that 5 will be losing some profit here, but look where it went. Those last 5 runners could have made them more money if they played this play. So just be aware, if you leave some on the table, you might get some more or you might not. Just be 100% secure in your initial play. All right, so I know that was a lot. You may not get it. Hopefully, as you learn, you can come back and check this out. But some gems before I be quiet. I see you, Jess. But some gems. All right, some gems before I be quiet and let y'all talk. Volume. Follow the volume. Nobody at the party, don't go to the party. That's the first thing you do. Follow the volume. Oh, and I forgot the indicators. Let's put the rest of the indicators on. Thanks for helping me, y'all. So this is the VWAP. The VWAP, right? Notice when it was on top of it, it took off, right? It struggled in the area, but once it got under the VWAP, it went down.
And Mal, explain what the VWAP is for.
So the VWAP is the volume weighted average price. So according to volume, the weight of the volume changed the average. So it's the average price with volume. So what's the average when 100 people trade? What's the average when 500 people trade? What's the average when 300 people trade? It gives you a trend to follow, right? So let's put on some other indicators. The moving average, the exponential moving average. Let's take the VWAP off. Notice the purple is the 9-day average. So this is the average of the price over the 9 days. So notice when it was above average, it went up. When it broke below the 9-day average, it went down. All right? Even over here, it rolled the 9-day average the entire time. This bright green one is the 100-day moving average. Notice it followed that too. As soon as it broke above it, it went up. When it broke below it, it went down, came back, messed around with it, went down again. And if we follow it throughout the day, it continued to bounce off the 100-day average. Then when it broke it, it went back up to our $10 level. Here off the $10 level. Broke the 100 again, it went down to our 948 level, which was made from here. All right, then goes back up to the 100 and back down. So if you do your research, if you know your indicators, you can figure it out. But you must be at one with the market. For example, if I'm at KG house and I think him and his girl are arguing and he just cooling, he's like, nah, she be all right, bro. He knows how volatile she is and she knows how he operates. I don't know. I'm not in a relationship, right? So you got to have a relationship with the market to be able to know what indicators tell you what's really going on. So anything you two would like to share?
One thing I'll add on to is the concept of when you said earlier, like leveraging up and leveraging down. And that's basically just knowing how much you're willing to lose, right? So let's say your portfolio, or let's say you have buying power $20,000, and you do a contract, or you're looking to get into UVXY. I think that's the stock's ticker symbol. You're looking to get into that particular stock. Kind of have an idea. Let's say the contracts are all worth $100 a pop, and you know that you don't want to spend over $1,000. Only budget $1,000 for that particular stock. Like, don't go over your budget. Don't go out of that means, because what happens is sometimes you get a little greedy or you become emotional. And an emotional trader is the worst type of trader, because a lot of times you get emotionally swayed to go down or emotionally swayed to go up, or you think, yo, this is going to be my home run. I'm about to quit my job tomorrow. This is going to be it. But you got to remember, everybody else in the market is also thinking that way too. So it's going to naturally change how the stock actually reacts. So be aware of what you're willing to spend. Keep that in mind as you do all your different plays. It doesn't have to be huge. I know when I first started, it was very incremental. I started off like a very small amount, and I just flipped it and just kept making money. And also, don't be afraid to lose money. One thing we always laughed about with Just and Mout was the fact that you gotta take your first big major L to be comfortable for all your other major L's. So don't be afraid to get in there and you might put $1,000 up and you might lose 800 of it. Like, don't feel bad. Just know that, all right, cool, I lost my first big L. I'm gonna play a lot smarter. Those emotions are gone already. I'm not as scared to actually be in the stock market. So here's how I play out for the rest of the year or for the rest of my time. So don't be afraid.
Dope. Dope. Good insight, KP. And another thing that I want to point out is, Mount, can you pull back that chart, please? One thing that I really want to emphasize is, look at all those indicating lines. Look at how Malcolm charts the stock that he's studying, charts the moves that he's studying, right? When you're going into a play, you must do your research before, right? Because if you're going in with just the he say, she say method, oh, this is one been hot for 3 weeks, you're gonna get smoked, right? So you have to literally, obviously, you could be like, I'm in the King Street Discord, right, where they tell you which ones. Just like Malcolm said, if you don't understand what's going on, you may see something in the chat, but if you don't understand and you still haven't put that on your watch list, and you haven't been charting, and you haven't been watching the indicators, you still have a potential to lose. Just because you're getting information from other people does not mean you can't do your own research, right? It's just like a test, right? You get all of the you get all of the information, right, from your teacher in a test, right? But that doesn't mean you can't go do your own studying on the back end, right? So just make sure you do your own research, so you won't get crushed just because of a he say, she say, and you're just trying to follow the wave.
Yeah. Great point, KG. I wanted to point out, and Malk, if you can kind of use the cursor as I'm speaking through this, I want to highlight, like at 9:30, if you can put the cursor over the market open. Okay, so let's say you're in a Discord, or you've done your research. Let's say you're a person that's in the beginning stages and you have not done your research, right? You've taken a course, and essentially you are in a chat that is saying, hey, we are looking to do a $10 put on this stock. Okay, you pull up the stock, and without knowing how to chart your own charts, knowing how to set support and resistances, you take that gentleman's advice, or the bot, or whatever the individual is that's calling that play, and you buy a $10 put on market open because it is what the chat told you to do. Understand that this is a 5-minute chart. Every one of these candles represents 5 minutes. Okay, it did not reach the peak until what time, Mal? Can you share?
10:30.
Okay, so from 9:30 to 10:30, you may be in a severe loss. Okay, you entered that position way too early, and now the trend has went against you, and you're unsure of the potential for it to reverse because you may not have the skill set yet to be able to know that, hey, 1050 or whatever the top level is the support, and it can reject that. You're more so entering the trade on hope and someone else's logic. And that is a very, very big mistake to make, but it is one that's very common in the beginning of your trading career. Okay, so it is important to use other people's calls as confirmation to what you already see from doing your own due diligence. Okay, because you could do exactly what the you were advised to do and still lose because you did not have a proper entry. Okay, let's say, for example, you see that it is trending up towards the resistance line, which is that blue dotted line, and you actually enter your $10 put at that point. Now, yes, you could wait for the $10 to break through and then enter the trade, but you actually be eating the entire time that it is going down from that resistance, heading towards the $10 breaking point. So that if it does not break it and it begins to reverse, you are still in the green. You have still profited because you make money. You started your position at the top of that V. If that's what you see, that's essentially what I see, right? Is an inverted V. Okay. If I was to enter the trade at the top at that blue dotted line, I could make money as that stock is trending down, even if it does not break through that $10 strike price. Okay. But that is only going to be a sense of security that you will understand after doing your own due diligence, which I always, always, always recommend to people, because it sometimes frustrates people and makes people believe that they are not built for this style of investment or opportunity because they have not done their own work and they're looking to just be led through the process. Okay. And if we know anything about our society, okay, we know that you can't follow things blindly. You have to read between the lines, and you have to have your own information backing your decision. Because at the end of the day, you are responsible for the outcome that you experience. Okay. So I just wanted to share that, because everybody's at a different stage in their career, in their trading career, or just beginning, looking for this to be an opportunity. And that is that's one major lesson that you can learn so that you don't experience losses like many beginner traders do. Okay, please take it from us. We've endured the process, and I just want to highlight it's a biblical reference, but the race is not given to the swift or the strong, but the one that can endure. Okay, so understand that the challenges are going to come. You are going to take losses. If you take an opportunity and look at any successful trader, they will highlight the losses that they've taken, but it has informed their decisions moving forward. And it's no different than parenting, no different than entering the professional world or being a student. All of us have found success in the educational world as students and professionals, and all of us have failed classes or exams horribly. But it is because we did not give up, and we learned from those experiences and put in more work than maybe the average individual when we did have a bad outcome. And that is what changed our trajectory. Okay.
All right, and Ms. Johnson, I see your question, but one thing I forgot to do. So the options change for the signal. And number one, if this is overwhelming you, good, because it's going to tell you what you're made of. Because a lot of people don't get into the stock market because they see everything. It's like, how am I going to learn all of that? Yo, learn one thing at a time. One thing at a time. One thing at a time. And not to be conceited, but the benefit, y'all got us. Like, we had nobody we knew intimately. Like, to get this information, you got to pay for it. We had to pay for it. Right? So ask questions, sure, ask questions. But you got to go do it on your own. Go get the book, go take the course, go watch the YouTube recap, whatever, so you can go learn. But a very quick recap of the options chain. So these are dates. They're all Fridays. Well, they should be. All Fridays, right? March 5th, March 12th. Let's go to this week, March 5th. And the stock currently is at 954. 954. So you go down here, and this is going to change in the morning because there's going to be some trades made in the morning. So don't use this to trade for tomorrow. Unless for whatever reasons it opened up exactly the same. So say you think the stock is going up. All right. So say you think it's going up to $11. So in the middle is the strike price, the price you want the stock to go to, $10. Right. This goes back to the signal. So let's say we gave you a $10 call for March 5th at 83 cents. So you go to the stock, UVXY. You go to the options chain. You go to March 5th, $10, right? Volume. This means that this day, 30,500 people made this play. So there's somebody to buy it from and to sell it to, pretty much guaranteed. Before today, there was just about 14,000 people who made the play. So overall, you got 43,000 people, 44,000 people in this play, right? And Delta and Theta talks about how much money you'll make, how much money you'll lose per day, more or less. But $10 strike, it's about $80 per for one, so $83 per contract. This is the amount of trades for this contract today. This is the amount of trades overall. So I just wanted to highlight that for y'all. Calls on the left, puts on the right, put down, call up. All right, so to get to Miss Johnson's question, where would you recommend investing in places to stay away from? Say I wanted to start with $100 and I may want to invest on either company like Johnson & Johnson or Bitcoin. Your first thing that you want to stay for when you're learning about investing is the market. The market is the last place you go. Don't invest anything in the market. If you're starting with $100, you get $100 worth of knowledge. All right? With that amount, that would definitely be, I would say, get 2, 3, 4, or 5 books. Get in the books and read the book like you got to write a dissertation on it. Don't read the book to listen to it. Learn from it. I love reading on my phone. Even if I didn't like screens, I would still read on my phone because of what I do. It's so much easier to take notes, copy and paste, turn it into a book, make the quote, send it to everybody. You don't have to actually sit there and write, right? And I have all of my books on my phone. When I'm in line, I read. Sometimes, before, when there was a lot of traffic, red light, I put it on the stand-up jump. I'm reading. I can read anywhere at any time. Ask them. I'm copying and pasting notes, all those kind of things all the time. Read. I got pages and pages and pages and pages and pages and pages of notes. All right. One thing I wish I would have did from the beginning was quote more of the authors. But there's a lot of information I would like to share in the future, but I'm scared whenever we blow up, I don't want to be here for no plagiarism because I don't know the author. So I only use what I can quote. Right? So just read and read and read. And Miss Johnson, I'll make a banner for you so you can go back and look. 2 great YouTube pages from YouTube University. You have Trading Rush YouTube page. Trading Rush, you can watch every single video. Even if you don't know what it means, like go to the first one, watch it. And another good one where they have actually like an introduction kind of playlist is Trading 212. Trading 212. Knowing what I know now, I was very antsy. I wish I would have spent more time learning and using paper. And Investopedia has paper options, so you can trade options with not your money, right? You ain't gonna get no real profit, but you'll get the profit in your mind. So I would take that $100 and go learn. YouTube is free. Learn and learn and learn and learn, and start trading tomorrow on paper. You see something, just put it in there, see what it do. You have no clue. Get in and practice of pressing the buttons, knowing what to press. Press the goddamn button, right? Know what to press. Get some books and dominate YouTube. And when you get money on paper, then you get into the market. You're welcome. And if you need suggestions on what to read, you got my number. You got KG's number. Hit us up. We'll send you what we read. But I will tell you, books on trading is like really for the knowledge, like the overall knowledge. You're not really going to learn until you're doing it, right? So get to those books, take those notes, take those notes, and trade paper. Webull has paper trading. Investopedia has paper trading. And a bunch of other brokers have paper trading. But the ones we used personally were Webull and Investopedia. Anything y'all would like to say in closing? And thank you for the question, Ms. Johnson. We appreciate the interaction. Anything y'all would like to say in closing, fellas?
One thing, I guess I'll start is small gains. That's it, small gains. Don't go for the big ones. Don't go for the huge ones. Don't go for the home runs. Go in there, learn how to do stocks, learn how to do the processes, learn how to submit options, learn how to do calls, puts, and then only worry about small gains. Green is green. You see the profit, 20% up, take it. That's all.
Yep. For me is know your portfolio, right? Understand what you want to do. You don't have to try to compete with someone else who may be, and I say this on our goal line Saturdays, don't compare your chapter 1 to somebody else's chapter 15, right? So, if you're just getting in the game or you don't have a huge portfolio to make some of these trades, then stick to what you're capable of. Stick to what your portfolio can allow you to do. And once again, don't just go and listen to everyone saying I'm on this and I'm on that without doing any research. Do your research, right? Understand what you're getting into before you do it instead of you blindly just doing it because everyone else is doing it. All right, so have a plan.
Yeah, I also agree with KP and KG's comments. And I would just add to understand that trading is one of those things that you have to find your own style. Okay. Everyone has their own style of parenting. Everyone has their own style of cooking. Everyone has their own style of dressing, playing sports or position. Okay. Michael Jordan is a very, very different player than LeBron, but they will both be in the same conversations in the end because they mastered their own style. Now, I think a lot of times, like KG was highlighting, is that when you are a beginner, you are looking at the success that people have had who have been doing this for years upon years. All right. And it's just not fair for you to expect the same outcome for yourself. Just the same way, if you have your first child, you understand when you have your second child that you will be and you are a much better parent to that second child because now you have the experience of the first one under your belt. Okay. You don't beat yourself up about it. You just utilize what you've learned from that first experience to now influence what you do moving forward. And that's the same thing with trading. I would also urge people to stay on a demo account, which is the paper account that everyone has been chatting about on this talk, for as long as you need to until you see a consistent outcome that satisfies you. Okay. And I don't mean, okay, I have 2 days where I made money and now I'm ready to put my real money in there. We are in a time where the market is in transition. Okay. Traditionally, our market steadily rises. Okay. But we've had a 10 to 12-year run of it doing that. We are in the midst of potentially a pullback or a small loss for future gains. It is a very unsure time though, okay, because a lot of companies are overvalued. They are not, even though they're trading at a very high price or a low price, it's not accurate to what they should be trading at. So we'll be getting some changes to prices that may not make sense to you as a beginner trader and may not always follow the rules that you're learning in the book. So that's why it's very, very important for you to be able to be in the game, but not also suffer from your lack of historical knowledge or lack of past experiences. Okay. And you can protect yourself from those things by playing, but practicing. Okay. Just the same way any athlete has mini camp or countless practices, right? Sometimes hundreds or thousands of practices, film that they go watch, workouts that they go do just to play 16 games. Okay. They're hours upon hours of reading the playbook, sitting in team meetings, working out, going through practice just to play 16 games. Okay. And some teams do that and they still wind up like the Cleveland Browns over the last several years. Okay. But after all of that work, we're beginning to see the outcome of all of their work and their investment. Okay. So please be patient with yourself. As I'm telling you that, I'm also speaking to myself. All right. Don't think that just because we're offering advice that we're at a place that satisfies us. We are very, very much still learning. Okay. But we are just not shy to share with you what we've learned thus far. Okay. And if you have any questions, know that we're available for you, and that we're an open door and we're just people. So don't be ashamed to ask anything that may seem like a question that you should know the answer to, or maybe we've reviewed and you just don't understand, because that is completely fine. People learn from people.
Hey, perfect segue, Just. But y'all got to know that that is temporary. Like all that stuff is cool, but do this process in a hurry. Do not rush. Do not rush, but do it fast. Do it very, very fast, right? And what I mean by that is you got to make some sacrifices. Number one, to get this. Because just within our circle, all of our growth mindset, all of our talking and all that kind of stuff, some of us move a lot faster than other people, especially with this. And I already know the people who feel that they don't have enough income to do it or a comparable income, they're not even playing the game yet. There's multiple contracts this week that was going for $9. You could have scaled in 10 times for $90. You must do it fast. Get the book today. Start making some sacrifices. One thing about me, I pay attention to everything. I make the ultimate sacrifices. Like some people miss things because of family. I don't. That comes second because they're going to come first later. Every single thing I do is attributed to me taking the next step, the next step, the next step, the next step, the next step. And I take pride in nobody doing it before me. Nobody. Get up so early every day. Nobody will do it before me, the things that I can control. I don't miss nothing. I'm not late to nothing. I don't complain about nothing. I take an L on the chin. It's not a loss. It's a lesson. And I move rapidly. I move extremely fast. I take pride in setting the pace. I take pride in pushing people to see that the man or the woman that they really are. You cannot give 99%. You cannot give 100%. Because your 100% today turned into 101 tomorrow because you found 1% of yourself yesterday that you didn't know you had, and you better use it today. Right? We all missed the opportunity last March. Like everybody's crying out jobs and all this. Man, hey, DCPS, I don't know. If what I learned this week, and I don't even like talking about it because I don't even want to bring bad energy my way or anybody else's way. Right? But the reason we fell off on the stock calls, we're so close, and people have to pay for this information. Right? We paid thousands and thousands and thousands to feed y'all what we fed y'all, especially today. So stop waiting and start creating. Things that come first, exactly, Just. Stop waiting and start creating. Things that have been coming first for you. Remember, learning is the feedback that you get from your results. So if you're getting smoked right now and you're unhappy at home, you're being forced to sit at home with the person that you've made. I don't care if it was not your fault. I don't care if your father was never in your life, if he was a fiend, or your mom did you dirty, right? That's not your fault. Nothing you can do. But it's your responsibility to overcome it. And the information that we're sharing can change your life, and you can do it for free because you have the paper. Paper is like digital money that they give you where you can get actual numbers on profit and loss, but you don't get the loss and you don't get the return. It tells you what you're doing. Right? So stop taking your time. Stop taking your time. Just said the average life expectancy is 80. So you got XYZ years left, God willing. Especially if you get on that call with us on Saturday, start working out, do it on your own, and take care of your vehicle, you might get 85. If you get your bread up by that time in 40 years, when we 70, there's going to be some technology that expands your life. So you might have an extra 20 or 30 on top of that. There's already people living to be 100. You never know how much time you have left. So ideally, you have a lot of time, but zero time to waste. So stop waiting. And that includes my friends and family who listen to this. Pick it up. Pick it up. You don't need a lot of money. You don't need no money. Comb through the YouTube, Trading 212, all of them. Write a book of notes. Go through Trading Rush, all of them. And if you don't, it's just not that important to you. Don't be mad when you got to wake up tomorrow sick mentally, because it's a virus out here, and you still have to go there because you're a essential worker. We need you. The essential workers ain't in no building; they at the crib. The ones that make the world spin, they're not in no building unless it's by choice, right? Or my check ain't good enough, or I'm waiting on the government. Stop waiting, because nobody's coming to save you. And it's got to be an emergency. You have to make it an emergency to be great. And you might rub some people the wrong way, but the people that are willing to rub people the wrong way and be misunderstood, those are the ones that are legends, that end up being legends. Why Kobe work out so much? He woke up at 3 and he worked out for 2 hours before. He gave us 40 and he worked out after. Right? Why did Jason Kidd not take a year off? Why did he go from player to coach? Why did he play for 30 years? Right? Just won a ship last year as the real head coach. You know? So stop waiting. Stop taking weekends off. Stop waking up at 8 and saying that's early. Stop watching all the TV. Do something with your life, because the information is there. All right? And as we said, if you really, really want to learn, we got Game 7 Academy. You can go on the website. Contact us through the website. We can set up some sessions and teach you what we know. But it's about to click. We got things coming out, so we'll be far more available to you all and whoever else you may know, whoever else come down the road to actually sit down and teach you, because the results are coming. I didn't want to talk about stocks no more until we started to get more results to share, because people don't move until they see results. But then oftentimes, keep in mind, when results come, the information, the price goes up, and you may get priced out. Right? So pick it up. We appreciate y'all listening. We will see you next week. Have a great day and get some money this week, whether it's real or whether it's paper. It's all the same in the end, because it's up here that is what matters. Peace out.